Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm gonna do a fundamental valuation about Dropbox, ticker symbol DBX, which is a company which is very popular right now in YouTube, and it looks like that investors are getting interested in it. So it's a quite small cap, below $10 billion stock, so it can be an interesting investment, hopefully. One of those investments that with a small cap we can reach around 3x probably of our money, so that will be interesting. So that's exactly what I'm gonna discuss today. Is the stock an interesting stock to buy now? It could potentially go 3x, 4x in the next 4 to 5 years or not. What is the fair price of it and what is the price target? So we are gonna see all of that in this video. The only thing I ask you guys, as always, is to please leave me an early like. It's very important for the video and the channel itself. You help me to reach more people and I'm very thankful about it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so here we have Dropbox Inc. This is the stock chart from March 2018 when they did an IPO. As always, when we have IPO, the stock price tends to go up like crazy, and then the enthusiasm usually goes away and we have a period of retracements, okay, where people seems like they forget about it. And why actually Dropbox was not very interesting and why now could become more interesting going on. So we have a main catalyst that, in my opinion, can make this company very interesting is in the next 5 years, but we need something to happen here. So let's take a look now at our Excel page, and we see that first of all, annual revenue. Now here is from 2015, and we can see that they started with just 600 million, and then they increased their revenues up to 2019, where $1.66 billion were made by Dropbox. Now these are analysts' estimates, and 1.91 billion in 2020 and then 2.12 in 2021. We don't have much history there, so here probably we can better understand the movement of the revenues. So these are quarterly revenues from the first quarter of 2017, and here we can see why overall the stock has not been very interesting for investors so far. Because you see that, okay, revenue went up, no doubts about it, but not in the way that usually you can expect from a quite small company which is growing, okay, after IPO. Usually when you take a look at more tech companies, so growth stocks, small cap, things like that, you realize that the things always go up, most of the time parabolic, okay, even though they don't make money at first, but at least the revenues goes up in a parabolic way. And this didn't quite happen with Dropbox. So just that probably took many investors' interest in other companies. As we can see, the quarterly revenue growth from Q2 2017 to Q3 2020 overall has gone down, as you can see from the yellow line. So we have is quite cyclical. Usually Q3 is very important for Dropbox, but then overall the average was going down. And why is that? This is pretty clear when we look at that. It is the free users against the paying users for Dropbox. So altogether are more than 600 million users, but then we realize that just 15.25 million, so just 2.52% are basically paying users, while the free users 97.48%. Now, obviously, Dropbox makes 90% of the revenues from the paying users, okay? So how can you actually make money when your paying user base is so small compared to all the people which are using your system? This has been a very huge problem for Dropbox over the last 4 to 3 years, even before they went public. And why is that? Because Dropbox, first of all, was kind of born as a simple way to use the cloud business. The service was very good actually, and very clear, easy to use, but when Dropbox was intended as a sort of a data storage platform, they could not compete with bigger stuff like, for example, Google, Azure, or Amazon Web Services. And if you go to see the Dropbox paying plans, you realize that for free, they are able to give you 2 gigabytes of storage. Okay, now this for most of the people or students that they just have to store documents, so written documents, and not everyone is a video making person. Okay, so just written documents, they don't take too much space. And 2 gigabytes was okay. Then if I needed more, I have, for example, Google Drive, which for free offers me 15 gigabytes. So Dropbox, it was clearly not able to offer that kind of free data storage that Google can, for example. So just in terms of the cloud business, they were not able to compete with that. And they cannot even say that, okay, now you have to pay me if you want 4 gigabytes, 5 gigabytes, because why the hell should I pay you if I can just go to Google and 15 are free? So that was a main problem. They were not be able, and they are still at the time not able to make paying users grow. During the last couple of years, actually, even 3 years, they have realized that, and the management started to think a little bit more differently. And this is why today Dropbox can be seen as a more interesting company. Why is that? Because they are trying to build a more of a workspace, okay? Not just the cloud business, but a workspace, a system, a service where you can basically be connected easily with all the other platforms. So you can use Zoom, you can use Microsoft systems, Google systems, whatever you want. It's very friendly with all the different platforms. And then they have also HelloSign, which is considered to be the second most important software to sign documents online. They are trying to put more stuff together to increase these slice, okay? Because users, if they see something that they like, and if they see a package of things where they can do a lot of stuff all together, they will be able probably to say, well, you know what, I'm gonna pay for that. So this is why right now Dropbox is actually becoming interesting. Now, when we take a look at the balance sheet, we have that this is just from Q3. The revenue from the third quarter has been 487 million, cost of revenue 103 million, and that gives us a very impressive gross margins of around 79%, which is very great. And they have money so to do more research and development, and then to, more importantly than ever, to do marketing, okay? So to spend on marketing. That's the key for them right now. And then we have an operating income and a net margin of 6.57%. Now, this was negative over the previous years, okay? So it's just a turnaround for them, and it's very interesting. Another reason why the company is becoming more appealing right now. And then let's take a look at the balance sheet, because it's a quite small company, but the balance sheet looks great. We have total current assets 1.33 billion, current liabilities 1.02, gives us a current ratio of 1.3, which is above 1. It's great, I will say. And then the total assets 2.86 billion, liabilities 2.01, shareholders equity 0.85, and then we have the total ratio of 1.4, which is once again, very acceptable. The debt to equity ratio is 30%. However, we have to understand that this kind of not too big company has $1.22 billion in cash. So this can, once it's taken to account, basically this goes to zero. Okay, so the net debt to equity ratio is zero, and this is very important. Gives them power to do stock repurchase if they think that the price is low right now, so undervalued, or they can do acquisitions, okay, like they did with HelloSign. The market cap is around 8 billion. It gives us a book to value of 9.28. Let's now try to do a valuation, and then I will say you what, in my opinion, is the huge catalyst that can change everything over there. As I told you, they have just become profitable. So as a kind of a small company with not much of profitable history, I cannot use the discounted free cash flow valuation. It doesn't make much sense. It is difficult to estimate the net margins and stuff. So as they have a price to sales ratio which is pretty consistent, I have decided to do a price to sales ratio valuation as I did with JD.com. So if you haven't seen that video and you are interested, go to check it out. I'll leave the link down in the description. Now, first of all, we have to grow the revenues. These one are historical, these one are analysts' expectations, and then as the analysts' expectations are on average a 16% growth for the next 5 years. What I did, I just took basically an area around that 16% and gives me 3 different amounts of revenues by December 2024, which is what we care about for this particular valuation. And then once you have this one, which overall are all above $3 billion in revenue, you just take them and put them here. And we have this matrix. Here actually we can see that since December 2018, the price to sales ratio has been on average around 4.8. Okay, so here we can see went up to 6.5 in basically the summer of 2019, and then now it's going down as the share price is going down as well. So now we are around 4.30. Here another example, we have Box, which is basically something similar to Dropbox. So a sort of a competitor, mainly for the cloud business. And we can see, just to have a comparable, okay, a sort of comparable, because these companies, they look similar, but it's difficult to find a very similar one to them. Obviously, I cannot take stuff like Google or Microsoft because it doesn't make absolutely sense. This one is Box, and we can see that overall the price to sales ratio is once again, even for this one, around 4.5, 4.6 on average has been over the last 5 years. So now that we understand this, as a price to sales ratio, I took this, okay, this range between 3.8 and 5.5. Now, we saw that Dropbox once went also to 6.5, but I don't want to put it too much high because I like to be more conservative, okay? So I think this is a great area to take the price to sales ratio. And then we have this matrix where basically we have 25 different market capitalizations by December 24. And then I took basically the average of them, and I have this one, 14.6 billion in market cap for Dropbox by 2024. We have discount rate 12%. The market cap today would be the fair market cap, let's say, will be 9.18 billion. Shares outstanding 315 million. And that would imply a fair price today for Dropbox of $29.17. I took a margin of safety of 35% and I have a share price of $18.96 per share. Now this, the price target, basically 2024, with this average market capitalization, I didn't consider much of a dilution in shares because they don't want to dilute too much. Opposite to that, it looks like that they are actually willing to do buybacks if the stock continues to be that undervalued according to them. So that would be a target price for 2024, $46.33 per share. Now, considering that today the stock is trading at a 19.86, it seems that the stock today, according to my valuation, is still undervalued because I just told you that the fair price should be around 29. Okay, so here basically you are inside a 31% margin of safety. Okay, because here 35 is 18.96. We are just a little bit above of that. Anyway, it seems a great buy opportunity. Now, when we take a look at the guidelines, they say, now obviously, usually I don't look at too much to it because the guidelines are quite like optimistic because they are made by the management. And obviously, they want you to invest in the company. Okay, however, they say that their target is to make $1 billion in free cash flows by 2024 December. Now, on average, tech stocks are trading between 4 to 5% free cash flows yield. That would mean that with a 5% cash flow yield, 2024, $20 billion in market cap. And considering, once again, divided by the shares outstanding, that would be the price target by December 2024, according to the guidelines. Okay, now all of that looks very great. Now, what is the catalyst that, in my opinion, can actually make this become true? Now, when you invest in Dropbox, you are investing actually because of mainly two things. The first thing is that what will happen after this pandemic. And we saw that these kind of very strong and strange events, they tend to change the world, okay? We saw with the very sad days of 9/11, and that basically since that day, airline traffic has completely changed, okay? Before that, it was a little bit more easy to go in the airport and go on a plane. And then since 2008, the financial world has actually changed a little bit. Before that, banks, leverage, everything was crazy, okay? Just, it wasn't making any sense. And then since then, the rules are completely changed. So how the world will be after this pandemic? For Dropbox, what you are expecting is actually for people to continue to work not from home, but more digital, okay? So also with distance. So for example, HelloSign, instead of always go to work and sign a document for real, now what you are expecting is a world that is able to actually communicate with distance, okay? So we saw, for example, Zoom, all these kind of companies. And will this continue to exist in the future, even when the pandemic doesn't exist anymore? Well, probably it could be, okay, because businesses can realize that it's somewhat more efficient, and then probably this kind of digital work can continue and actually at a faster pace than before the pandemic, okay? It's kind of the event that changes the cards in the table. So that's the first catalyst. And the second thing to ask, which is the main catalyst for this to happen, is will paying users increase? So will Dropbox be able, with the marketing, that's why I told you the marketing is very important. This company can become very interesting if medium-sized businesses are able to understand that Dropbox is not anymore just a cloud business, but it's something very smart, which is friendly with other platforms, that it's a workstation, okay, where you have many things all together, that you can do it if you just pay a fee, okay? So if people understand that, we are gonna see this slice increase substantially, and that will change the historical trend of this company, because when we see the decline growth in revenue, is because paying users were not increasing enough, okay? And the users overall were increasing, okay, but paying users, no. As well as the average revenue per user was increasing, okay, but not enough. And if now users are actually able to understand and they realize that Dropbox is much more than a cloud business, then we can see that trend change completely. Okay, so this is the main catalyst, and that's why I told you that marketing expenses now are very important for Dropbox. You want to see them increased in the next couple of quarters, and I think that the next couple of quarters will be a key for this stock, because as of now has not been very interesting because of what I told you. You cannot compete with just the cloud business with things like Google, Microsoft and stuff, okay? It's just impossible simply because of the economic power. But if you create something which allows you to do more, well, then you can change people's mind and then start to buy your stuff. I don't expect huge businesses to actually use Dropbox simply because historically huge businesses, they make these kind of packs with Microsoft, okay? Because they need Word, they need Excel, they need whatever they need, and then together with them you buy the pack and you also have the cloud, okay? So I don't expect huge businesses to change that. But actually, medium, small size businesses, if they realize that it's not just a cloud based business, well, probably that will be very interesting. And this is the main catalyst that can actually push the stock above $45. Okay, so around this range over there. We need that. So that's actually the bet that you are making when you invest in Dropbox. Will users realize that Dropbox is something more than a cloud? If this is a yes for you, then okay, today Dropbox is definitely a buy. Okay, just ask you this question. I cannot answer you this question for you. I think that everyone has different opinion and it's good. Everyone has his own opinion. So leave me down a comment and tell me, do you think that people will actually realize that or not? So this is the end of the video, guys. I hope you find it interesting and leave me a like, please. Thank you for it, and subscribe to the channel so you don't miss any new videos like this one. And then, as always, guys, have a wonderful day.